economy.
Mary, you have mentioned JetBlue and Southwest a few times, but in the story it talks about the most cuts from airlines came from Delta and United, and I'm wondering if that's a function of their size or based on their size, they had a higher proportion of cuts than other airlines. Where does that sort of fall proportionally?
Yeah, part of it is because they're the largest, and I think they would tend to shift more capacity around than some of the smaller airlines. United in particular was also affected by a 60 aircraft drop in the number of planes expected to receive this year, so they've had to do some adjusting. And, you know, what Delta said basically is we put the flights where we see demand. And so, you know, if we see that demand is declining slightly, even though it's going to be a busy summer, then they'll take those seats out of the market.
And what's interesting, this is like great. This is just chock full of data. It's one of those stories for months we're all going to be going back to and like citing.
Well, you know, I immediately went to my hometown airport and
I saw
put the cursor on there to see 4% decline in seats, by the way, this summer.
I saw that too. So, all right, the slowest rate of summertime expansion in years. Among the 8 largest U.S. airlines, the number of available domestic seats, though, will be the highest since 2019, but up just 5% from last summer. That's Cirium data. Fees, what can you tell me about fees? I was booking a flight for my daughter. It's like luggage, everything. Like you want to breathe, and it's like that's going to be a fee. I'm exaggerating, but Mary, does any of that ever go away?
You know, they did do away with the change in cancellation fees at most of the airlines, and that was a big one. They did that during the pandemic because nobody was booking, so they didn't want to disincentivize that by saying, well, if you do book, you know, and you won't need to change it, we're going to charge you a big fee. So those went away. But I don't think we're going to see much in the way of luggage fees going away. You know, those have been increasing lately. Probably not going to see fees for food on board, for picking specific seats. All of those seem like they're here to stay.
It's the world we live in. Carol always is struck whenever we go to the airport. She's like, we're like, you know, carrying our luggage to the counter, and there's nobody there because they expect you at the counter to tag your bag and put it on the belt yourself.
Right? We check in. We get those little stickers.
Yes, we check bags.
Hopefully do it right. We like, you know, put the little tags
Doesn't
on the bags.
matter where you're flying or
and then
what you're
they're
flying.
like, oh, could you drop them? I'm just saying.
That's how they make money, Carol.
I know, I get it. Mary, thank you so much. Always a deep dive into how it all works and how it plays out. This is an incredible story, among our most read on the Bloomberg. Check it out, folks. It's interactive, and you can find out in your hometown whether or not seats are going to be going down.
4% in San Luis Obispo, California. All
right, Bloomberg News U.S. Airlines reporter Mary Schlangenstein. Hey, still ahead, the president that never leaves. It's a thing we're going to explain on the other side. This on a day when we see markets, we are pretty much at our lows of the session, down the most on a percentage basis on the Dow, down about 1.6%.
Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Justice Department filed an antitrust lawsuit against Ticketmaster and parent company Live Nation, accusing them of running an illegal monopoly over live events and driving up prices for fans. Attorney General Merrick Garland.
We allege that Live Nation has illegally monopolized markets across the live concert industry in the United States for far too long. It is time to break it up.
Live Nation and Ticketmaster accused of using anti-competitive practices like locking venues into long-term contracts and retaliating against their rivals. Live Nation denies it engaged in any practices violating antitrust laws. Israel will expand its military operation against Hamas in Rafah, saying 1 million civilians have already moved out of the city. Military spokesman Daniel Hagari says Israel is, quote, operating with care and precision. Israel has said it needs to invade Rafah to achieve its goal of destroying Hamas. Rafah has become a refuge for Palestinian civilians fleeing the war. And the FCC has issued a $6 million fine against the political consultant who sent AI-generated robocalls mimicking President Biden's voice to voters ahead of New Hampshire's presidential primary. Steve Kramer also faces 24 criminal charges in New Hampshire. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Steep losses for the U.S. stock market, right to the numbers, because we got the Dow down 577 points now, a decline of 1.4%. The S&P down 36, down 0.7. NASDAQ right now down 64, drop there of 0.4%. Stocks and bonds are retreating as data showing business activity accelerated amid a pickup in inflation just reinforced speculation that the Fed will remain on hold. S&P below 5,300, 52.70 right now with a 10-year, 4.47%, the 2-year, 4.93%. Spot gold down $43 the ounce, tumbling 1.8%. Crude oil now lower by 0.8%, $76.99 a barrel. Chipmaker NVIDIA, though, surging above $1,000, $1,040 right now, up 9.6% after that bullish sales forecast last night showed AI computing spending remains strong. Again, recapping, S&P down 36, drop there of 0.7%. Dow particularly hard hit because of Boeing. We've got the Dow Jones Industrial Average down now by 1.5%. NASDAQ down 0.4. NVIDIA up by 9.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie. Well, the November presidential election in the U.S. now, less than 6 months away, there's a new variable to consider. And as far-fetched as it may sound, the prospect of Donald Trump, should he find himself back in the Oval Office and then never leaving, is weighing big time on the minds of some voters.
This story featured in the forthcoming issue of Business Week magazine, soon on newsstands and now on Bloomberg.com and at Bloomberg.com/businessweek. Also, of course, on the terminal. With more on his story, Bloomberg Business Week national correspondent Josh Green. Josh, the author of The Rebels, Elizabeth Warren, Bernie Sanders, AOC, and the Rise of the New Left. Also the author of the bestseller Devil's Bargain, Steve Bannon, Donald Trump, and the Storming of the Presidency. Josh joins us from our Washington, D.C. bureau. Josh, what's going on here with the former president's rhetoric, what his advisors close to him are telling you, and the idea of taking him seriously but not literally kind of comes to mind when I read this?
Yeah, well, I've been talking to Republican and Democratic strategists recently who'd mentioned that they were seeing something strange in the focus groups and polls they were conducting, and that is that a lot of swing voters were worried that Trump was going to declare himself president for life if he's reelected in November. And as I did some reporting on the source of these worries, basically this is something that Trump likes to joke about. Of course, there was the January 6th riots that gave a lot of people pause. But it's a factor that I think isn't being paid a lot of attention to, but both Republican and Democratic strategists are seeing it and wondering if this is going to have an effect on the outcome in November.
You know, it's interesting, and Josh, we don't certainly have to tell you, but this idea that former President Donald Trump will say something and people will be like, well, that's Donald Trump. Like, you know what I mean? They're kind of dismissive. Is there something, though, different as he runs for a second go at the White House?
Yeah, I think there are a couple things. I mean, as you mentioned, the Trump people sort of laugh this off as this is just Trump being Trump. He likes to say outrageous things to get a rise out of liberals. He's talked a little bit about, well, should I maybe serve 3 terms? Just this past weekend in an NRA rally, for instance. But while a lot of people write it off as just Trump being Trump, this particular group of voters seems to be listening to it and worrying about it. And as strategists have kind of plumbed the reason for this, they've come up with some interesting theories. And the best one I heard was that it was really, what was driving this fear was the Supreme Court's decision to overturn Roe versus Wade. A Democratic strategist told me that what that did was convince a lot of ordinary voters that things they wouldn't have imagined possible, like Roe versus Wade being overturned, or Trump abolishing term limits, suddenly seemed real enough that these voters were worrying about it, and it seemed to be pushing at least some of them back into Joe Biden's camp.
Well, you get into the piece that the idea of a president serving only 2 terms, whether consecutive or not, hasn't been in the Constitution since the days of the Founding Fathers by any means. It was ratified in the 1950s after FDR served more than 2 terms. Can you talk a little bit about the history of presidents since 1950, talking about the potential repeal of the 22nd Amendment, or at least alluding to the idea of serving more than 2 terms?
Yeah, absolutely. I mean, as I did a kind of a deep dive in this piece, what was interesting was that almost immediately when after the 22nd Amendment was passed, popular presidents and their advisors in both parties have kind of objected to it. Ronald Reagan said in 1987 he would like to overturn it. Democrats in the House of Representatives twice, once during Bill Clinton's presidency, once during Barack Obama's, tried to push legislation overturning it. So it's something that popular presidents sort of chafe at. But that being said, the hurdle to actually get it overturned and abolish term limits is almost unthinkably difficult. It would require large majorities in both houses of Congress. It would require large majorities of state legislatures to approve it. So it's not something that's plausibly going to happen. And yet still, people have learned that Trump is a norm breaker. It's something that gives them pause, and it's weighing on them as they make their decision on who to vote for in November.
Hey, Josh, there are focus groups, and then there are focus groups by those who have been doing them for some time that maybe you sit up a little bit straighter and take note. And is that kind of what's going on? Because I am curious. I think it was the Democratic individual in your story from David Binder Research who's been doing these focus groups for a long time. Like, I just do wonder, is there something that just makes everybody kind of be like, wait a minute, there's something different this time around? Because you're like, as you said, not the first president to maybe say, yeah, I'd like another term.
Yeah, I think that's exactly what's going on. I mean, if you go back to 2020 and the January 6th uprising, it's sort of shaken a lot of people and made them realize that, well, like, maybe things aren't as smooth as we expect. The focus group guy that you were referring to has sort of said, historically when we conduct these focus groups and we throw out these kind of wild scenarios, voters usually push back and say, oh, that could never happen. But that kind of pushback now, he says, has stopped in his focus groups. I was able to sit in on a couple of these and sort of see this myself, and people are just much more willing to believe that crazy things can happen, and that maybe one of those crazy things will be Trump declaring himself president for life. As implausible as that sounds, I think, to most voters.
Well, I was struck by a woman who you spoke to who actually said that she would vote for Biden even if he is in a coma, despite the fact that back in 2016, she voted for former President Trump during that election. Talk to me a little bit about her thinking, Josh, and how this could move the needle with the undecided voters.
Yeah, well, the people I was focusing on in this piece really were that narrow group of undecided voters who are going to decide the election. A lot of committed Republicans like it when Trump talks about abolishing term limits. A lot of Democrats like to get upset about it, but their votes aren't really up for grabs on either side. So the focus of these focus groups and the voters that I talked to were people who had either been former Trump voters, former Biden voters, were now undecided. The woman you mentioned, Laura McCammon, is a grandmother in Wisconsin I talked to, voted for Trump in 2016, but as she's witnessed January 6th, she's listened to MAGA media figures like Steve Bannon talk about multiple terms. It scared her into deciding that she wouldn't risk another vote for Donald Trump. And she told me, as you said, she's planning to vote for Biden in November no matter what.
Hey, while we have you, and one thing we wanted to ask you, and this was certainly a story that we've been talking about this week a lot, and this has to do with Donald Trump, a video posted to his social media account, that referenced a unified Reich as a potential news headline if you won a second term. Devil's Bargain, bestseller. You really got inside Steve Bannon and the road to the White House for Donald Trump the first go round. How are you thinking about some of the terminology that's being used, the rhetoric that's being used by Donald Trump?
Well, this is something that we've seen going all the way back to Trump's first run in 2015 and 2016, that kind of winking at the far right, either through phrases or memes or videos or what have you. I don't know whether this was intentional or not, but given Trump's background, given the praise he heaped on some of the Charlottesville protesters in 2017, another earlier controversy over anti-Semitism, it's something that people in the press and people in the electorate, I think, are very alert to. So when something like this pops up in a Trump video, you see the media pouncing, you see the attention to it, and it's something that the Trump campaign, either intentionally or unintentionally, hasn't really managed to fix and bottle up and kind of clean up their campaign.
Right.
But I think we can see, based on this, it's something that we're going to have to keep an eye on going forward.
Right, and certainly those undecided voters are keeping an eye on, too. That maybe explains what you just talked about in your story. Hey, Bloomberg Business Week national correspondent Josh Green. Josh, thank you so much. Hey, coming up, one of the most read stories on the Bloomberg, the Bahamas penthouse at SBF overpaid for, Tim.
It's hitting the market. Are you looking for some real estate?
No.
Okay. That's next. This is Bloomberg.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We do have stocks at the low of the session right now. Boeing certainly moving the Dow Industrials lower. Boeing CFO Brian West says the embattled planemaker will continue to burn cash in the second quarter and in the full year as it grapples with a turnaround effort of its factories and faces a new challenge in the form of additional certification requests from China that have temporarily halted deliveries to the country. Right now, we've got Boeing down now by just about 7.4%. The Dow, by the way, lows of the day down 627 right now, down 1.6%. Sources tell Bloomberg Alphabet and Meta Platforms have held discussions with major Hollywood studios about licensing content for use in the tech giant's artificial intelligence video generation software. Both companies are developing technology that can create realistic scenes from a text prompt and have offered tens of millions of dollars to partner with studios to some capacity. Alphabet shares, they are lower now. We got Alphabet down 1.7%. Meta Platforms lower by 1.2%. James Gorman will be stepping down as Morgan Stanley chairman at year-end, capping a nearly two-decade run at the firm in which he rescued it from the brink of failure and turned it into a wealth management powerhouse. Morgan Stanley shares right now lower by 2%. Jamie Dimon says parts of JP Morgan's business in China have, quote, fallen off a cliff in recent years. That according to the Financial Times, citing private comments from Dimon to attendees of the bank's flagship conference in Shanghai. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. It was no surprise the Senate voted down the bipartisan border bill, marking the second time it's been blocked in just a matter of months. Republicans said they would block it, and they did. The Justice Department is suing Ticketmaster and parent company Live Nation, accusing them of running an illegal monopoly over live events, driving up prices for fans. Attorney General Merrick Garland says Live Nation relied on unlawful, anti-competitive conduct to maintain its monopoly over the live events industry.
The result is that fans pay more in fees, artists have fewer opportunities to play concerts, smaller promoters get squeezed out, and venues have fewer real choices for ticketing services.
Department officials did not say how the company will be broken up. Analysts expect it would seek to separate Live Nation's concert promotion business from Ticketmaster. Now, this is graduation day at Harvard, but 13 students did not get their degrees because they participated in a pro-Palestinian encampment on campus. Now, the move came after 115 faculty members showed up to a meeting on Monday, voting to allow them to graduate anyway, even after they'd been disciplined by an administrative board. Well, the board said no. And during today's graduation, a group of graduates walked out of the ceremony chanting Free Palestine. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stennebeck.
All right, Amy, thank you so much. That story is among our most read on the Bloomberg today, about the Harvard students, their commencement, 13 students who participated in pro-Palestinian encampment on campus. They're not going to get they're withholding their degrees. Like you said, do they not get their degrees at all? Do they have
4
to wait?
years of work.
It's kind of like wild.
And then, they'll have to go to employers and tell them.
There's a lot of, it's never easy when we have these discussions. But anyway, it is among our most read stories. But like you said, is it 4 years and you don't get your degree?
Also among our most read stories on the Bloomberg terminal is one about some pretty fancy real estate that is going up for sale in the Bahamas.
Yeah. It's a $30 million penthouse atop the Orchid building where Sam Bankman-Fried lorded over the rise and fall of his $32 billion crypto exchange, FTX. It soon could be yours. Apparently, they're getting ready to sell it.
It's on New Providence Island. It's the sun-kissed capital of the Bahamas. FTX liquidators are close to putting the remnants of the giddy days of crypto's fallen boy wonder up for sale one by one. Topping that list is the penthouse where Bankman-Fried lived and worked with the folks at FTX until it collapsed in scandal in late 2022. It's where SBF would nap on a beanbag chair near the pool that snakes across the wraparound balcony. That was until police took him away in handcuffs.
Yeah, in the run-up to the collapse, former FTX CEO Ryan Salome and other lieutenants spent about $255 million, $255 million on 52 condos, offices, and plots of land scattered across New Providence Island. This is from documents in the liquidation. So, yeah.
So we should note that it's clustered around the Albany development. It's a 600-acre planned citadel for the rich on the western tip of the island. It calls folks like Tiger Woods, Justin Timberlake, investors in the community.
Yeah, it's interesting. I guess SBF bought the penthouse, which is the crown jewel of Albany, for $30 million, according to those purchase records. And my understanding is, yeah, it just hit the market, I think, for $29 million. So even if the penthouse fetches $30 million, taxes and fees will eat up about 20% of that. So it's
taxes
a loss.
and fees. It's where it always goes. It's where it always goes.
All right,
to
everybody.
To the lawyers, to the government.
Oh, everybody taking a bite. Hey, coming up next on television, The Close. Stick around for them. If you're watching us on Bloomberg Business Week, we've got an interesting story. It has to do with private credit. It's got a problem. We're going to dig into that in just a moment. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. We are continuing here on Bloomberg Business Week. We're just about 1 hour away from the closing bell. And interestingly enough, we've got, I think this is the second day where we've seen both bonds and stocks in lockstep, which is unusual. So stocks are down, so too are bond prices. That means yields are trending a little bit higher on this Thursday, and maybe that's why you're seeing so much selling here.
We'll talk about the economic data in just a few minutes with Stuart Paul over at Bloomberg Economics to get an idea of exactly what's got investors a little concerned on this day.
Yeah, exactly, right? The expectations probably around interest rates. Hey, having said that, we're obsessed with private credit. Tim and I have been at Milken, and it feels like in the last 3 years, that's all anybody ever wanted to talk about was what was going on in private credit.
Did it feel like it that much this year? Because we were there 2 years ago, was like private credit was everywhere.
It was a little bit more of a mix, but yeah.
2022 was the year that it was like, from 21 to 22 was the year that private credit felt like it took over.
Well, yeah, I still think people were talking about it big time. And what's interesting, this story that's among the most read, private credit has too much cash, not enough places to put it. I mean, at some point, it's like, where do you put all this money that all these investors are putting into these private credit funds to put to work? You got to put it to work.
So that's the most read story on the Bloomberg Terminal. Another one of the most read stories on the Bloomberg Terminal. It's about the new dream job for college graduates. It's from our Bloomberg opinion team. The government?
Yeah.
Question mark?
Apparently so. Apparently so. Speaking of dream jobs, being CEO, I ask. A new book catches up with the CEOs of UPS, PepsiCo, and more. The lessons learned in their first trip to the top of the C-suite, and I guess how we can all learn from them.
And we got a rocker coming into the studio a little later.
We do. Randy Bachman, founding member of Bachman Turner Overdrive, stopping by the studio. Got so much to talk about. He's 80 years old, his career, his life, but he's also putting up many of his legendary guitars for sale in an auction that's happening next week. So we'll see what he has to say about all that.
All that and more over the next 2 hours. First up, though, a check of the day's trade and top business stories. Here's Charlie Pellet.
Thank you very much indeed. We are taking care of business right now with the Dow, the S&P. We're all in the red. S&P right now down 43, 52, 63. Drop there of 0.9%. Dow Industrials down roughly 600 points right now. Lows of the day down 1.5%. We've got NASDAQ down 69 points right now. A decline there, actually down 90 points right now. A drop there of 0.5%. 10-year, 4.47% with a 2-year. 4.93%. Spot gold down $45 the ounce, selling off by 1.9%. West Texas Intermediate crude $76.90 a barrel, down now by 0.9%. Stocks and bonds retreated as data showing business activity accelerated amid a pickup. Inflation is just reinforcing speculation. The Fed will remain on hold, and of course, a lot more on that topic coming up in just a moment. Nvidia trading above $1,000 after that bullish sales forecast showed AI computing spending does remain strong. Sarah Kunst is the founder of Clio Capital, and on Bloomberg Television this morning. She told us she likes but does not love NVIDIA.
I think that NVIDIA is a good, solid company that has turned into almost a bit of a meme stock in the sense of sort of the adoration and the excitement around a company that just isn't the only game in town.
Indeed, NVIDIA up now by 9.1%, above $1,000 a share at 1,036. Recapping a sell-off underway, 57 minutes to go ahead of the close. We have got the S&P down now by 46, drop there of 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie. Do appreciate it. Well, we just heard the news from Charlie. Bonds tumbling, stocks lower as data showed U.S. business activity accelerated amid a pickup in inflation that will likely keep the Fed on hold. We did see also U.S. jobless claims post the biggest back-to-back drop since September. So to help us make sense of this economic data, especially in the context of the Fed minutes that we got yesterday, we're joined by Bloomberg Economics U.S. economist Stuart Paul. He joins us here in the Bloomberg Interactive Brokers studio. So Stuart, it's interesting because we got a little bit of, a reset today based on the economic data that we got. From your perspective, what exactly is moving markets lower on the economic data front?
We saw, as you just mentioned, we had two data prints that skewed hawkish. We had PMIs surprising to the upside with manufacturing activity expanding in the preliminary estimates from S&P in the month of May. And jobless claims are low. I mean, initial jobless claims are tracking below the seasonal norm. And when the Fed takes that into consideration, when market participants take that into consideration within the context of the Fed, especially the Fed minutes yesterday, which showed, quote unquote, various members of the FOMC considering tightening policy further, there is reason for concerns. No wonder why you would see rates marching higher.
I'm sorry. All right, I'll push the button first. It feels like it checks, though, with what we've heard from Fed officials in the narrative, right? Higher for longer, we get it. We're not quite there, folks, and we want to make sure that when we've got inflation down and where we want it, it stays there, it sticks there, right? So, I mean, I guess, I don't know, it's put into the movement in the bond market just a little bit higher? Like, is it significant? Like, how do you see it?
I think part of it is just a little bit of a breather. So we saw earlier in this month a relatively dull employment situation report. We saw inflation numbers that were a bit more tame so far in April. And then the first data that we're really getting for May shows, well, maybe that was a bit of a head fake and we're just on that same trajectory that we'd been on to start the year, which is a really slow pace of disinflation.
Right.
Economic activity staying relatively robust. Remember, the Q1 domestic private demand numbers showed about a 3% annualized pace of growth. It was really the trade balance that was weighing on Q1 growth. So if we're considering domestic economic activity and we're looking at the May numbers that we have so far, things are still relatively strong, and the labor market is cooling only very slowly. So I think that it's warranted that folks would anticipate that higher for longer posture and completely strip out any probability of, say, like a July cut, for example. And I think that that's what we're seeing.
What about stripping out probability of a November or December cut?
So this is when it gets a little bit tricky when we talk about September, when we talk about November, then we get into the politicization of the Fed and whether the Fed can stay politically independent. I think that if anything, risk is skewing toward having maybe just one cut this year, and that cut would probably be in December if the Fed were to want to get that off. If we were to see two cuts this year, I think the Fed trying to maintain some sort of sense of independence would probably do it in September rather than November. Cutting the day after Election Day or 2 days after Election Day is just welcoming criticism that they were holding off on rate cuts. So they're going to find themselves in a pretty precarious situation come the fall.
Goldman Sachs CEO says no cut this year, and I feel like there's some growing narrative to that. Do you think that's even a possibility, Stuart?
Yeah, when we see such a slow pace of disinflation, when we see sticky core goods inflation, when we see very slow disinflation in shelter that the Fed even said in its minutes yesterday, it's basically banking on to get back to that 2% inflation target. It's understandable why folks like Solomon would think that the Fed might not even cut at all this year. I think that odds, again, are starting to inch towards just one cut this year, if anything.
You guys are sticking to that.
That's right.
When?
I think in December, and I think that if the Fed were to get that itch to cut sooner, it would come in September.
Here's the thing, though. Like, Tim and I have constant conversations with you guys and with Mike McKee, and we talk about what the Fed really cares about. And leading up to the next Fed meeting, again, it's some inflation prints and the job market, right? The labor reports. I mean, so those are the ones that obviously we focus on the most, but you do see how sensitive the market can be to even kind of other reports.
That's right. So if we do think about what the Fed cares about most, it's going to be core PCE inflation, which we're going to get next week, right? So looking ahead to the personal income and outlays report next Friday, I know that this is a bit of an early sneak preview, but we should expect to see personal income slowing because of that dismal jobs report that we saw in April. We expect that we're going to see consumption slowing to a pace of about 0.4% growth. That's half the pace that we saw in March. That will dull the core inflation print, but 1 month does not make for a trend. And if we're seeing anything in these May numbers that we got today, it's that the strength that we saw to start the year may just prove more persistent than the Fed actually wants.
How many people is various to you?
Various is such a cop-out word. It's amazing. So the Fed always uses words like a few members or some members,
many.
Several, many.
Various is like quite a range.
Various is what you use when you do not want to pin down any number. But if anything, for someone like me who is sometimes skeptical of Fed communications because I think they need to maintain a sense of credibility, and they don't want to jeopardize credibility, using a word like various makes me incredibly skeptical and makes me think that there are more than some. For example.
Maybe a handful next month.
How many days to the blackout period?
I think we're at 9.
Okay, just making sure you're keeping track. Stuart Paul, thank you so much. Bloomberg Economics U.S. economist Stuart Paul joining us here in studio. This is Bloomberg.
In one of the most read stories on the Bloomberg terminal about an interesting trend that she's noticed, at least according to one recent survey, and that's that more graduates are looking to jobs in the public sector.
They are. Alison Schrager, a senior fellow at the Manhattan Institute. In addition to being a Bloomberg opinion columnist, she joins us here in our Bloomberg Interactive Brokers studio. So an important caveat, some of your best friends work in the government.
Actually, I don't have a lot of friends in government, but
you wrote in the piece.
Yeah, but there's no shame. I mean, it's a reasonable, it's a respectable career path.
It is. We all know people who work in the government. All right, tell us what's going on. I have a 21-year-old, she's got 1 more year in college, but I will say that working in the government is certainly on her radar.
Really?
Yes.
Well, because I was surprised, because the survey, did a lot of sort of hype about, government is up and tech is down. And then you saw the numbers and it was like up from 5.5% to 7.5%. And tech is down from 23 to 21. So you're like, all right, well, people still prefer tech. But what really concerned me was that there was another, the listing of what you're looking for in a job. And the number one thing by far overwhelming was stability. And last was a fast growing company, which is just like when you're young. I mean, if you get on a fast growing company path, this is how you get rich and successful.
Well, we love how you start the story in a week where we have been obsessed with NVIDIA and still are, that everybody's looking for their NVIDIA, right? You want to be with that company that's going to be the hot new thing, hopefully get in early, get options, and make a lot of money. That's it.
Yeah. But no, they want stability.
I will say for my daughter, I don't know that that's it. She's going to hate me that I'm talking about her.
She's not even a senior.
No, but they start early and there's a lot of pressure. But on way to doing something probably in the private sector and possibly in the investment world. But that experience is certainly looked at highly. Or can be.
I guess it depends on what you do. I mean, I think what struck me about it is it's like there's been a downward trend of working in the government. So, of course, but we've had a lot of new policies in the last couple of years that aim to grow the government and grow manufacturing was also a big growth area in terms of job interest. So, I mean, these are policy priorities, so maybe it reflects that.
What does it tell you about the idea of stability and the way that some graduates might be looking for more stability rather than that path to being the next Jensen Huang?
Well, I mean, there is all this evidence, like Jeannie Twang's generations, that has all this evidence that young people are more risk averse. So I guess, I mean, I think that would be the concern, is that they're going to be less dynamic and less risk takers, which, you know, means less growth for the future, which, you know, we need them to pay for all of our retirements, so that's not good.
I've already warned my daughter.
So I said it could reflect that like, hey, you know, I don't want to be at that fast-growing company. I just want the stability, and that might reflect more risk aversion. Also, I mean, this is a generation. This is a very tumultuous last couple of years.
Yeah,
so I mean, maybe the stability is just very appealing after, you know, having their end of high school and honestly almost their entire college career be incredibly chaotic.
I will say there's also this revolving door between the government and the private sector, and
yes,
it's pretty incredible to see, and especially with politicians in the House and Senate. Like, ex-politicians go from making, what, I think close to $200,000 a year maybe as a member of the House to like $800,000 a year being a consultant for some of the companies or industries that they used to actually legislate. And I wonder if there's any sort of visibility there.
Well, you know, it's kind of weird to say, but I hope that's it. Because then at least there's some ambition. Because I think when I think of most people aspiring to work at government, especially where most of the government jobs are, it's like at the state and local level.
Yeah.
Which is, you know, more like parks and recreation.
Yeah.
You know, than working for the SEC.
Which could be fun. No, just kidding.
Yeah, it totally could
Again,
be.
someone needs to make the world work. And when I posted the column on Twitter, so many people wrote, and they're like, excellent. It's great. People have such a great sense of service. Which I then felt bad. That's not what occurred to me.
That's interesting. Why do you think that didn't occur to you?
Because I've never worked in the government. Actually, not the U.S. government. But I mean, I always thought of it as being sort of like boring and stay safe. And I always wanted to like do something, you know, a little bit. But I mean, that might be my bias. Maybe I also don't have a good sense of service.
I don't know. That is super interesting. And I do think that maybe there are, like, we've gone through some generations where it's like big government, what do they do? It's those people there forever and, you know, you have to dust them off kind of thing. Forgive me, not my view, what people say. But I do, like, I am encouraged when I hear a younger individual say, I want to be part of government. Like, I want to help, you know, create policy. I want to do that. And so I think that's kind of interesting.
Or is it like a lot of these jobs are like state and local level. They're not glamorous, but they really are important. And, you know, we all need them to make the world go round.
Exactly. One line I love in your column, what explains this shift? Perhaps they just feel grateful to be working. Because like this idea of, and I've heard this from, you know, various graduates, like it's tough, the job market out there, which is amazing because we talk about it being tight and that there are jobs out there, but that many are finding it tricky.
I think I wrote a column about this a couple of weeks, or maybe it was last week, that, you know, I think we often forget about the fact when we talk about generational strife.
Yeah.
That, like, your first job, getting that first job and getting that good first job and getting a foothold in your career is always hard. And it's hard for every generation. It was hard for us.
It took me a year and a half to finally get something and not settle, to be quite honest.
Yeah, and we get into these generational shifts, but I think it just doesn't change. It's hard to become an adult. And it's hard to make that transition into the, like, having a career and feeling stable in your career. And it's never going to be easy for anyone.
It's because we don't want to be adults. Tim and I were talking about
this. Well, this generation does, though, apparently. Like, they're not looking to be like poets somewhere. They want the government job.
Yeah.
At the end of the day, it's just one survey. Do we have to think about that a lot?
Well, you know, and it's a small survey. It's only like 2,300 people. I think the reason why I felt like it was worth writing about, though, is it does seem in line with other surveys I've seen that put such a high premium on stability.
Yeah.
Such an aversion to risk. So it's consistent with that. Because, yeah, normally you wouldn't be like, okay, a survey of 2,500 people, like 2% more want to work in government, big deal. But it does seem consistent with other things. And I was struck by, they had an interesting chart where they did the correlation of where job opportunities are. And it was a very sort of perfect correlation with, you know, people feeling like disenchanted with finance and tech and more with government and manufacturing.
I will say that, you know, having covered a lot of different business cycles, that I do feel like companies are very, very quick that if there's some pressure or something, they'll cut jobs, they'll cut costs, because that's what, certainly if they're publicly held, that's what Wall Street and investors want. So, you know, that can be pretty uncomfortable to be around.
Yeah,
right?
Although we do think of government as more stable, but I mean, especially if you're working at the state and local level, municipal finances aren't looking that good, that actually you might be better off in NVIDIA.
Or maybe if you're in a part of a cabinet.
Jeez, Allison.
Sorry to throw water on your safe
Or if you're part
option.
of a presidential administration.
Yeah.
You never know what's going to happen come November.
Really, really fun column. Something to think about, though. And like I said, just talking with my daughter and some of her friends, like it's interesting that they are looking at this and kind of
Grad school?
interested in it. Yeah, they'll be grad school.
Fortunately, it's
Ka-ching,
not expensive.
ka-ching.
Oh, wait.
Oh, does it cost
Yeah,
a
it
dime?
doesn't cost
Not
a
at all.
dime.
Allison, thank you. Yeah, so love it. Allison Schrager, Senior Fellow at the Manhattan Institute and Bloomberg Opinion columnist. Check out more at BO.Go.
Coming up next, talking a little private credit. Looking forward to that. That's on the other side. This is Bloomberg Business Week.
Wall Street, we do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in retreat. 39 minutes to go until that closing bell clangs on Wall Street. Losses across the board. We're looking at a 600-point drop right now in the Dow Jones Industrial Average, down 598. We want to be precise. We are also trading at the lows of the day. Got to keep it locked into Bloomberg Radio to see where things shake out today. NASDAQ down 103 right now, drop there of 0.6%. And again, the S&P lower now by 0.8%. 10-year, 4.47% with a 2-year, 4.92%. Spot gold down 1.8%. 1% right now, $23.34 the ounce, and West Texas Intermediate crude lower by 1%. Stocks and bonds are retreating as data showing business activity accelerating amid a pickup in inflation. Reinforced speculation the Federal Reserve will remain on hold. The big stock story today, NVIDIA. Stock holding above $1,000. It is up now by 8.2%. As for what it means for the market backdrop, Megan Horniman is Chief Investment Officer at Verdence Capital.
This is clearly a momentum-driven rally around AI. And I'm not saying that AI isn't going to be here and isn't going to change the way that we do many things in work and life. But I think when you have a hot new topic or a hot new item, a hot new theme, this can continue for some time, where everybody has that kind of fear of missing out.
Megan Horniman of Verdence Capital again. NVIDIA up now by 8.4%. Recapping, S&P down 45, a drop of 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the rise of private credit, we hear it all the time. For a third year in a row, it was a big topic at Milken. Often the work of all asset managers and some of the world's largest asset managers, big banks getting in on it too. Just today, Bloomberg reporting that JP Morgan Chase is on the hunt to buy a private credit firm to augment its $3.6 trillion asset management arm. Could be farm
A
too.
farm is where they grow private credit.
It does. You just sprinkle.
They say money doesn't grow on trees except at the private credit farm.
Listen, everybody's all in, and it's something that you and I talk about a lot.
It leads us to one of our most read stories on the Bloomberg today. It's about private credit and its problem. With us now is John Sage, Bloomberg News private credit reporter. He joins us here in the Bloomberg Interactive Brokers studio. So, John, I'm most read on the Bloomberg terminal today. We've been talking for a while about some of the concerns that are in the private credit market. The concern that you and Carmen focus on today is the idea that there's too much cash and not enough places to put it, which has some serious implications. What did you guys find?
Well, it's a interesting problem to have, especially when you consider these asset managers. They're trying to grow as big as they possibly can because, well, it generates fees. And for some of these public private credit lenders, that's exactly what their shareholders are asking for. But if you have too much cash and your biggest competitor that was dormant due to a lot of hung debt and other things has been dormant for maybe about a year, when you have those two things converging at the same time, or at least when banks are coming back and you have too much cash, it starts to create some of these potential problems. And in the story, we cover how in the past month, really, we've seen the lowest prices really ever in the private credit market, which is pretty rare. And some of these unique behaviors that you wouldn't really expect to see out of a private credit manager even 6 months ago.
So by lower prices and odd behaviors, dig a little bit deeper, like what specifically?
Sure. So the spread that's offered to a lot of these lenders. So what they will pay over the SOFR rate or the benchmark rate, whatever that is. So Avita, which was a buyout, Ares actually offered the lowest price to them that we've seen in the private credit space at 4.5 percentage points.
Which is unusual. They're paying usually a lot more.
Exactly. So usually, even 6 months ago, 9 months ago, a year ago, usually I'd say 6% was the average.
Yeah.
So to come down 150 basis points in 9 months is pretty remarkable.
But doesn't it show that the market is getting more efficient? The idea that, well, okay, this was an opportunity for many years. That was a really good opportunity. And because this is the way that economics works, when there are opportunities, other people chase them. And when you have a lot of people chasing a finite number of opportunities, well, then prices go down.
I would say absolutely, but to an extent, though, where in a lot of these cases, one of the examples in the story is DPR, or it's DCI, which is known as BOSA, but has recently changed its name, where it had private credit financing. It looked as though it had arranged a deal with existing lenders, but another lender, one of the biggest lenders in the space, actually swooped in with lower pricing to undercut the existing lenders that were already in that deal. So
it's pretty aggressive.
Some of these competitive pressures that are pushed or pushing people, especially because they have so much cash. For example, one of Blackstone's funds, BCRED, it raised $2.8 billion in a quarter. This time last year, that number was closer to 800. 800, 900. So you're just seeing this huge amount of growth from just 1 year later. They're pulling in so much cash. Where do you put it?
The other thing I wonder about, John, is that, one, I wonder then, is it one company doing the deal all by themselves, so you're not necessarily spreading the risk? I also do wonder if they're so aggressive to do a deal, cut the rate, but also maybe look away from things that might be a little bit more risky, that they might not have done at this rate, but are willing to do it in this environment.
Right, where taking so one of the things that private credit loves to say is we're diversified.
Correct.
And
this is why you don't have to worry, everybody. The risk is spread.
It's
That's
spread
the private
between...
creditor speaking.
That's
okay.
correct.
Just to
I'm
be
playing
clear.
one
Yes.
on TV right now.
Well done. Where they in the story we mentioned the days of clubbing.
Yeah.
Where you would have 5, 10, usually, in some cases up to 22, 23 different lenders all in one deal, and they'd take slivers of that loan. The risk is diversified.
Right.
Where when these companies and these buyouts and these lenders are getting bigger and bigger and bigger, they're starting to say, well, it's a great place for us to deploy capital, but just by saying this is going to be ours and we're not going to let too many other people in. So the other example that we have is CoreWeave, which was Blackstone's largest commitment to any single deal. The total deal was $7.5 billion. They took down $4.5 billion just themselves, which that itself is rare. And another example that didn't make it in the story, but is Park Place, where it was previously a broadly syndicated loan that has hundreds of different holders, but Blackstone and Blue Owl came in and said, we're going to be the only two lenders to this one company, and Blackstone actually publicly said that they took down 90% of that, and that was a $2 billion financing. So Blackstone in this case is saying we need to deploy capital, so we're going to take 90% of this business
because they've got pressure from investors to put this to work and get the return so that they can think about what comes next, right?
Another big piece of this too that you find interesting, especially with the growth of business development companies. So business development companies are much different than what you think of in traditional private credit.
We heard about this a lot at Milken too. Play this out for us.
Sure. Where private credit, the way that it has grown is similar to private equity funds, where they get one big commitment at the start of the year, and they don't have to touch that money for usually up to 3 years. What's different about business development companies is that when I say I would like to give you $1 to invest, they get that dollar day one. So the clock starts ticking. Returns start being affected as soon as they get that dollar. They don't have the flexibility to say, we're going to wait for 3 years until we actually call this. So they're getting these dollars day one. And in another example that we have in this
story. So that's
story,
pressure to put it to work.
Exactly. Pressure to put it to work, pressure to find a home for it. And that's why some of these behaviors are being created. And in an example from a different lender, HPS, that being they had so much money coming in, they actually said to JP Morgan, their biggest distributor, slow it down. There's too much coming in. We'd like to take a breather here.
So it's a problem or a challenge for private credit managers, but is it a win for companies that are looking for financing in private credit?
Good question.
I'd say absolutely.
Because they're getting better rates.
Yeah.
So many competitors out there, they're hungry for their business. They're going to swoop in at the last minute, give them a more competitive rate. Why is this bad?
And so tough to say it's bad for businesses, but I think what a lot of people are concerned by, especially as you can see it in business development company filings. So Moody's, for example, I guess it was a couple months ago, they put a couple BDCs on credit watch negative, which was the first time they did that since COVID. Which COVID, obviously, there was a lot of issues going on. And now in this market, you wouldn't necessarily expect that. But they were saying there's a lot of problem loans that are starting to grow in private credit. And is that because maybe private credit got too expanded on itself? It's still unclear, but if they continue to have this pressure from investors on both ends, the expectation is that that pressure will continue for them to be potentially overexpended.
Well, I guess the concern too is, right, we talk about the shadow banking system and that private credit, private equity, all these have become an important part in the middle market space in a big way, which is so much a part of our economy. And you think about, okay, so maybe it's a lifeline for companies that couldn't get money otherwise, which can be good, but it's a lifeline for companies that might not get money otherwise because maybe they shouldn't have gotten money otherwise. And you do wonder if there starts to be cracks or problems, and if it starts to slow down, because credit companies are, worried whether or not companies can't access money, and then how that plays into economic momentum or lack thereof. I mean, there's a lot of kind of different ways this could go, but you do wonder also about the financial exposure of these firms, if they're so important to our financial system, yet they're under the radar. Like if there's cracks and they come undone,
sure.
How do we feel this then ultimately?
Sure, and
right?
it's
just quickly
certainly more to be seen. Where when you think of how the private credit market has now grown bigger than the broadly syndicated market for loans, that's where you're starting to see now that they're not just some small farmed business.
No, it's not something cute anymore. It's pretty significant. Great to have you here, John Sage. He's Bloomberg News private credit reporter. Look forward to more reporting on his front.
Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. For the second time in 3 months, a border security measure negotiated earlier this year by a bipartisan group of senators failed to advance in the Senate. The legislation fell short of the 60 votes needed. Nearly all Republicans voted against it, as they said they would. The Justice Department filed that sweeping antitrust lawsuit against Ticketmaster and parent company Live Nation, accusing them of running an illegal monopoly over live events and driving up prices for fans. Attorney General Merrick Garland explained how the monopoly allows Ticketmaster to tack fees onto concert tickets.
Ticketmaster can impose a seemingly endless list of fees on fans. Those include ticketing fees, service fees, convenience fees, platinum fees, price master fees, per order fees, handling fees, and payment processing fees, among others.
Live Nation denies it engaged in any practices that violate antitrust laws. Airlines across the country have recently launched a campaign highlighting shortages of air traffic controllers. Now, FAA Administrator Michael Whitaker tells ABC the federal government is making moves now to address at least some of those shortages.
We have worked to make sure we can hire directly from the military more efficiently. We are working with aeronautical universities to allow direct hiring through there, and we're keeping our own academy completely at capacity.
Whitaker says it takes time to fill out the ranks of air traffic controllers. Training typically lasts from 18 months to 2 years, and as we know, the Memorial Day weekend is going to be heavy with travel. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
3:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks close to the lows of the day, even as NVIDIA rips higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are sinking after the hot 9:45 economic data. The Dow's currently down 600 points. The S&Ps are down 40, while NASDAQ is lower by 0.4%. The U.S. 10-year yield at 4.47%. Gold is lower by 45 points. Oil trading in the red, and Bitcoin, that's down by 1.9%. Among the main 11 S&P sectors, only tech was in the green. Utilities and real estate were under pressure. And looking at the Dow, all were trading in the red, while Boeing fell 7.6% and led to the downside. After earnings, NVIDIA traded back above $1,000 a share. And in other news, Live Nation fell 8% in news the DOJ wants to break up the company. Wrapping things up, Intuit and Workday report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk SQUA on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we're driving to the close. We're talking with Bill Maloney because
he's a legend.
He's a legend, and it's also just kind of an interesting market. And it's just, here you think NVIDIA's going to come out of the gate, and it is rallying in a big way, no doubt about it. But you're not seeing it translate across. And even though we did see some enthusiasm out of the gate earlier, we were just talking about the hot manufacturing data. We talked about that with Stuart Paul earlier, and it just is enough to push up yields higher, and it makes everybody kind of rethink, all right, where's our environment right now? Every tick he says is like just focusing on.
SQUA on the Bloomberg terminal.
SQUA?
Yeah, that's how you get to Audio Squawk, and you can hear Bill Maloney all day.
Worth listening to. All right,
Definitely.
Also worth listening to is Lauren Sanfilippo. She's Senior Investment Strategist for Merrill and Bank of America's Private Bank. She joins us, Bank of America Private Bank, I should say. She is joining us from New York City. Lauren, good to have you here with us. I'm always interested because you guys have wealthy clients, those who deal with you in the private bank. What do they want to know about this environment?
Well, for sure they want to be opportunistic here up ahead of the election. They're watching a market that just seems to be straight up and to the right. And, I'd say what we're telling them on a sector level, at least, is to buy energy here. We think it's a great place to put money to work. We're looking at some good balance sheets for energy, valuation still attractive. There's still that energy transition that's in front of us. So, we try to be opportunistic with our clients.
Why is energy attractive to you?
So as I said, they have those fortress balance sheets. I think another way to think about it, though, some of these long arc stories, and I think this market likes narratives, we think about hard assets, hard power, and hard hats. We like hard assets, that commodities tilt, just as an inflation hedge, geopolitical risk hedge. Hard power, we think about the fact that security, the world we're living in, right? Cybersecurity, that's also included under hard power. And then hard hats. We have these massive legislative packages out there. They're being awarded now to companies, and the spending spigots are clearly open.
So narratives, I like it. And you said kind of like hard assets, it sounds like. What's interesting is AI, in a day when we're focused on NVIDIA, which is doing very well compared to the rest of the market, soaring in today's session. What's the AI narrative and AI investment play that you think makes the most sense? Is it the hard asset play, if you will, like the power centers needed to power the data centers? Pull that line through for us, if you would.
Carol, yeah, I agree. This is sort of a both story in the sense it's software and hardware. So AI, we still believe AI has a place in portfolios, core holdings, right? I don't know if you buy it at this level today. Valuations have obviously run up, but I think AI's impact will be measured in years. It's not like a quarter-to-quarter type play. We're seeing, though, some real profitability come through, though, on this whole early innings of this AI revolution. So it's a hardware and software play for sure, and data centers certainly part of that story. Power, electricity, GPUs, the whole sort of ecosystem.
Which part of the ecosystem are you most bullish on?
Right now, I mean, utilities. It's kind of like the underdog story, right? I mean, I think it's the tertiary story to the fact that utilities are defensive. So you sort of saw utilities work really well last month, April, when we had that pullback in the market overall. But it's that power producer. It's the setup is right there. I mean, we need more electricity devoted to those GPUs, the data centers. Then you start thinking about cooling equipment, and there's just a lot of tentacles to the story.
Interesting. And I'm looking at utilities. It's your third best major industry group out of 11 in the S&P 500 for the year, up about 11%. Above it, though, infotech, which is up 17%. Communication services up almost 20% here. So investors, we know kind of what's been some of the trends here. I don't know. How do you look at this market more broadly in terms of, I don't know, does it need a breather? Are you thinking about rates on a regular basis and the implications of that? It just kind of feels like day to day a bit manic in terms of what we think might happen next.
Manic, it's probably a good way to put it. I'd say, though, there are plenty of reasons, though, to still be positive on the market without getting too manic about it. I mean, consumers are still spending, right? Businesses are still investing. There's a lot of CapEx. I mean, I think that's one great underlying thing we learned from earnings season this quarter, right? Mm-hmm. Businesses are certainly still investing CapEx, putting up big numbers, buybacks. I mean, we even had Atlanta Fed GDP at an estimate of 3.6%. So, and we're more than halfway through, right? I mean, we're closing in here on the end of May here. So, a lot to still be positive. I mean, try not to be too manic about it, but there's a lot out there to be bullish on.
What out there concerns you, though?
Yeah, so inflation, sticky. I mean, isn't that the obvious answer? It's going to be the predominant focus now for once we close in on the end of earnings season. And then the focus for markets really will shift back to that macro data. So inflation for sure. I think another risk, volatility is basically absent. I think volatility is already on vacation right now. The VIX is super subdued. But, geopolitical flare-ups, let's not completely rule it out, right? I mean, I know we temporarily see some price swings following some of those flare-ups. We've seen that a lot this year. But, I think there's always that sneaky potential for geopolitics to matter.
Hey, Lauren, earlier we were talking about a story that's among the most read and about kind of private credit's problem, that they've got a lot of money to work, to put to work. And so they're having to do some interesting deals, maybe, take down the rates in terms of when companies need to do a deal with them, they're getting lower rates, which, obviously you think about in terms of returns for investors. Having said that, you are part of the B of A private bank. How many of your clients are accessing private credit, are interested in doing private credit, that the private markets are what they're really interested in today?
A lot of focus actually has been devoted to this private credit sleeve, I'll say. And, it speaks a lot to clients hear about this liquidity environment, right? And so immediately that's sort of like the intriguing factor. So private credit, yeah, we are going to have to do more in this space sort of through year end. And we're up against an election, so that's another consideration.
But, I mean, are your private bank clients increasingly, you guys putting investments for them into private credit?
Yes, and I think that's an industry change sort of this year, right? I do think that we're sort of ebbing towards that. This is the year.
All right, going to leave it there. Hey, Lauren, thank you so much. Lauren Sanfilippo, she's Senior Investment Strategist for Merrill and Bank of America Private Bank, joining us here in New York City. We've got about 10 minutes left in the trading day.
Down 600 points on the Dow Jones Industrial Average. That's 1.5%. The S&P 500 down 0.48%, while the NASDAQ Composite down 0.4%. That's 72 points to the downside.
Yeah, and interesting, and it's just, you're looking at NVIDIA that is definitely easily an outperformer in today's session. We're looking at shares of NVIDIA. Folks still holding on to most of the day's gains, up 9%, up almost 12% at their highs, but still up about 9%. So staying above easily that $1,000 mark. But if you take it something like, it's a big part of the semiconductor area, you look at the stocks, it is down today, and 24 of the 30 names in the stocks are actually lower. So NVIDIA really the lone gainer here. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. Lows of the day right now. Intuit among the names that will be reporting after the close of trading. Shares did advance earlier in the session to a 52-week high before retreating. Along with the rest of the market, Intuit right now is trading lower. We do have Intuit shares lower by 1.2%. Also reporting after the close of trading, Workday, that stock higher by 0.5%. Workday's sales are seen rising 17% thanks to large enterprise demand for its finance and HR products. The chipmaker NVIDIA trading above $1,000, holding above that number after a bullish sales forecast showed that AI computing spending does remain strong. Dan Ives is a senior analyst at Wedbush Securities, which now has a $1,200 price target on the stock.
This is the most important thing. Demand's accelerating. It's not even slowing down. So when we start to look in trajectory out, not just for NVIDIA, but second, third, fourth derivative, look, I don't know if there's popcorn machine, but I think it's time to get the popcorn out because this AI revolution in 1995 moment is just starting.
And last night, we did have NVIDIA saying second quarter revenue will be about $28 billion, topping the $26.8 billion predicted by analysts. Boeing CFO Brian West says the embattled playmaker will continue to burn cash in the second quarter and in the full year as it grapples with a turnaround effort of its factories and faces new challenges in the form of additional certification of requests from China. Boeing shares today down 7.9%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, just under 5 minutes left in today's trading session. Getting ready to head over to our TV colleagues, count you down to the close on this Thursday or Friday's Eve, however you like to call it. Having said that, this story popping up on our radar, check it out, everybody. The universe of 401k accounts with balances of $1 million or more at Fidelity Investments rose to a record 485,000 in the first quarter. This is coming from the company, Tim.
Okay, so this is what you have to know because stocks have surged, so the number of retirement account millionaires jumped 15% from the prior quarter and 43% since March of 2023.
Wow.
This kind of goes with the market. I mean,
yeah, I guess so, right?
You know, kind of it tracks. Average retirement account balances. What's that?
A lot of index investing there.
Well, that's what 401ks are.
I know.
I mean, every 401k I've ever had has pretty much just offered indexes.
Yeah.
That's all we're allowed to invest in anyway. But I don't know.
Yeah.
I don't know. Have you?
No exotic stuff for us.
Can you? I guess I've known folks who use retirement accounts to trade. Actually,
you can do smaller cap. You can do some overseas.
Yes, that's true.
There's
average retirement account balances, meanwhile, hit their highest level since the end of 2021. They rose to 125,900 for 401ks and 127,745 for IRAs.
You know what's the bummer part?
What's the bummer?
Great reporting. Despite the gains, ensuring a comfortable retirement remains a big challenge for many people in the United States. We've talked about this a lot. Inflation has made saving for retirement even more of a struggle, and close to 40% of all workers are not even in a workplace retirement program. According to 2023 Bureau of Labor Statistics data, some 40% of retirees, meanwhile, rely entirely on Social Security income. Listen, this is a conversation. We've talked about longevity and issues and what are we all going to do?
And just because the number of 401k millionaires has hit a record doesn't mean that that's the norm. It's actually still, it's the minority. Only 2% of the roughly 24 million defined contribution plan accounts at Fidelity have $1 million or more in them.
Yeah.
So the account holders who do have it, they're older. They had an average tenure of 26 years in their workplace retirement savings plans and an average contribution rate of 17%. The lesson to the young folks, save early,
I heard
save
Paul Sweeney
often.
talking about it earlier,
What did
getting
he say?
his kids who are in jobs like maxing out their match at their companies.
Smart. That's what you got to do.
Like reminding kids about that.
Time is on your side.
All right, everybody, we're going to head over, just got a few minutes, speaking of time left in today's trading session, just bouncing off our lows, over to our TV colleagues. That's because Beyond the Bell, it is starting right now.
We're about to take you to the bell and beyond.
Beyond the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with our friends Carol Massar and Tim Stenovic as we welcome our audiences across all of our Bloomberg platforms. That includes television, radio, and our audience on YouTube. Carol,
yes.
On a day where it looked like the equity markets were going to stage a pretty decent rally on the back of those NVIDIA earnings, but that faded pretty quickly in the day here. Broader concerns right now about inflationary pressures.
Yeah, some hotter than expected, right? Manufacturing data here in the United States, and then everybody starts to get a little bit worried. Certainly, we also got weekly jobless claims, but some concerns that maybe things are still continuing to be a little bit hotter than everybody forecasted. And so what does that mean? Maybe we don't get a rate cut anytime soon. Maybe not even this year.
Can you believe how far we've come in just a few months? I mean, at the beginning of the year, at the end of last year, we were talking 5-6 rate cuts, and now we see markets move like this on a day when, okay, people reset their rate cut expectations from maybe from November to December for one cut this year. Or maybe, Alex, none at all.
It was so thoughtful. Like, can we think about where we've come? I can't remember yesterday, so I don't know what that's about. But and Romaine and I were just talking about before too. Like, what is the next catalyst then? Like, you get Memorial Day, it's the summer. You know, volume's going to go down. You get Jobs Day on June 7th. Like, it's just going to be hang tight. See you in a couple weeks because there isn't anything else to move the market.
9 days to the blackout.
What about the
9
next
days
Fed
to the
meeting?
blackout.
Yeah.
I keep counting down. I'm
June
looking
12th?
for something.
I don't know.
Oh, blackout for the Fed speak?
Yeah, she
I
has a,
see. Okay.
she has a
okay.
count.
I'm
That's
a
how
little confused.
I
too.
make
was
fun
like,
of her
does
because
Carol
she has
know
a
something we don't?
Are the
It's like-
utilities cutting power?
So Carol,
Sorry.
yeah, that's all right. Carol Thanos Massa there, apparently predicting the end of the Earth. But nevertheless, Earth continues to rotate. All those stocks not necessarily along for the ride, at least not for this particular day. Let's start with the S&P 500, a drop of about 0.7% or 39 points here on the day. You had a similar move lower on the NASDAQ. The NASDAQ composite down about 0.4%. The NASDAQ 100 down about 0.4% as well. Again, the ballast that we got from NVIDIA just not enough to really overcome the huge drag that we got elsewhere, particularly in the cyclical space. You saw that in the Dow Jones Industrial Average, lower by more than 600 points or 1.5% today. You saw that in Dow Transports, lower by 186 points or 1.2%. And you saw that in the Russell 2000, Carol, down 33 points or about 1.6%.
Yeah, the equity tone very clear on this Thursday, folks. S&P 500, most names in the index losing ground today. 449 names to the downside. Tim, 54 to the upside. So definitely a risk-off trade here.
Still getting earnings. Watching shares of Intuit, the company raising its fiscal year guidance. Third quarter net revenue coming in above estimates at $6.74 billion. Estimates were for $6.64 billion. Third quarter adjusted EPS coming in at $9.88, beating estimates of $9.38. Shares moving lower, though, in the after hours, down by 2.3%.
Also looking at Ross Stores here. So first quarter earnings coming in at $1.46 a share. That looks to have beat estimates. That was about 1.35. So we're just waiting for some more numbers to come by in here. But Ross Stores looks on an earnings level to have beat that stock just starting to trade in after hours. What else I got? Sales were up by about 8%, beating estimates. And you got merchandise inventories were up by about 10%. So relatively strong quarter, it looks like.
Yeah, and looks like inventories, while they are elevated, maybe that's sort of the setup for the season. Margins were up, as was store count. And it raises a lot of questions here about the complexion of the retail space right now, that sort of dichotomy between what's going on in the luxury space and what's going on the more affordable space at locations like Ross.
Exactly. Some commentary and context here coming from our team. Earnings per share for the second quarter projected to be in the range of $1.43 to $1.49, up from reported earnings per share of $1.32 for the prior year period ended July 29, 2023. The CEO weighing in, though we had hoped to do better, first quarter sales were in line with guidance despite macroeconomic headwinds that continue to pressure our customers' discretionary spending, which is something, Romaine, you were just talking about.
I do want to get back to shares of Intuit because they are moving lower in the after hours, despite the fact that the company raised the fiscal year guidance. It does see fiscal year adjusted earnings per share of $16.79 to $16.79 $16.79 to $16.84. That came in above estimates of $16.42. Sees fourth quarter revenue about 13 to 14%. It also sees small business self-employment revenue up about 18%, but shares now down about 3.3%.
Yeah, it's interesting as you bring that up. I was just looking at Workday, the big application software maker, also reporting, and it was kind of a similar complexion as Intuit in that the numbers themselves weren't all that bad, Tim, but the shares are moving lower here in after-hours trading. So it seems like this is an issue, too, of not just about meeting expectations. You really got to beat, and you really got to beat big in this environment to get the extra pop in that stock, given how much valuations have risen.
Yeah, it looks also, though, that the small business and self-employed group, though, did really well. Up 18%. Their consumer group was up 9%, but to your point, like, you really got to deliver if you're going to do really well on that. I also want to point out here, guys, that Boeing shares fell about 7.6% today, the biggest drop in about 4 months. So it's not just earnings that are coming through, it's also some individual company stories that are really weighing on that after their cash burn is going to be intense.
Yeah, I mean, the Boeing story is a big one, right? And that's exactly what weighed on the Dow Jones Industrial Average. So, yeah, we definitely saw that play out in a big way. Quick check on gainers, guys. NVIDIA. Surprise, top in the S&P 500, the NASDAQ 100, pretty much holding on to most of the day's gains, at its highs up almost 12%, finishing, though, with a 9.3% gain. We know the story, topping $1,000 a share, up, I think, 109, 111%. The bullish sales forecast showing that AI computing spending remains strong, so that second quarter revenue will be about $28 billion, topping the $26.8 billion predicted by analysts. 10-for-1 stock split, they've 150% boost in its dividend. Yeah. Oh, did you
That's
know?
pretty good.
Yeah. I mean,
So what happens? Does that mean that
you got to
the share price goes up?
Well, you got to sell the shares before June 7th, Romaine, or else the value of them is going to go to about $100. Okay, I'm just kidding.
I guess
it's
first,
a joke.
First, I got to buy the shares.
It's a joke. I'm making a joke.
It's a joke.
We got the joke, Tim.
It's a joke.
Do you want the other gainers?
Yeah, I want the other gainers.
All right, synopsis. I'm going to
Is there a lawyer standing behind you or something, Tim? It was a good joke, and you stepped on it yourself.
It's a joke. It's a joke. It's a joke.
You know, we're surrounded by glass. You never know who's peering over you, Romaine. That sometimes happens. All right, synopsis. Top gainer in the NASDAQ 100, folks. That was up 2.3%. Analyst positive. It's a chip design company, in case you didn't know. Reported second quarter results last night. Beat expectations. Raised its full year forecast. And you had a bunch of analysts, Morgan Stanley, Piper, raising their price target. So that one was up 2.3%. And Elf Beauty. I know that we talked about it a lot, I feel like, on the Bloomberg, or in the Bloomberg universe today. This was up almost 19% in today's session, soaring. The company reported fourth quarter adjusted EPS per share. And net sales that came ahead of consensus estimates. It just did well. And basically, even though that there were some numbers, I think, that didn't meet expectations, analysts are generally positive, thinking that maybe they're a little conservative in their guidance.
Okay, you got the gainers, Carol. Yeah. I'm doing the decliners. I do want to start with Boeing. Alex, Romaine, you guys hit on it a little bit. Shares did fall by 7.6% today. The company did scrap a plan to generate cash again this year and said it will suffer another significant outflow. In this current quarter, it's fighting to get production back in order and ramp up deliveries in the wake of all the issues that the 737 MAX has had, not just this year, but of course in recent years. Also, we're checking in on shares of Live Nation falling 7.8% today. The U.S. Justice Department and close to 30 states suing the company, alleging a, quote, entrenched illegal monopoly over the live events industry and seeking to force the company to sell off Ticketmaster, which it bought a few years ago. Antitrust enforcers claim that Live Nation and Ticketmaster have engaged in a variety of anti-competitive practices, including locking venues into long-term exclusive contracts and retaliating against rivals and venues that seek to use alternatives. Shares down by 7.8%. You know what's funny?
No.
This is not, I mean, look, am I speaking as a consumer or as
it's choose your own adventure here.
Okay, choose your own adventure. Yeah. How do you guys feel about buying tickets for a concert that you want to see? Is it a good experience?
Well, no.
It's a pretty tough experience, right, Alex?
It's an expensive experience.
It's a very expensive experience.
And the whole idea of splitting the fees, where you go through the whole process and you think, oh, this is a $100 ticket, and then when the fees get added, you realize it's like $150, and you're like,
yeah, it's pretty
I
out
don't
of
really
control.
like this band that much.
But look, it's supply and demand, right? I mean, people will pay, especially for big acts. I mean, Billy Joel,
but
Taylor
isn't
Swift.
the bigger issue? It's less just about the cost to you and me, but it's also about, at least based on what the DOJ is alleging, let's just make that clear, that there's a sort of anti-competitive nature in the structure of the business itself by representing artists, by owning the venues, by selling the tickets, et cetera, et cetera. They're basically have this from top to bottom, the entire supply chain, if you will.
So it's a good question to consider. If the Justice Department is victorious here, will the experience actually get better for consumers?
Right, and that's sort of the whole point of antitrust stuff. But then again, you never know. And also, Bloomberg Intelligence was saying that this could take a very long time to even suss out. So in a spinoff might not even be valuable, you might not have a forced asset sale. So this is a slow burn here. This is not gonna be a quick flame out.
All right, off to Friday we go. That's a wrap.
Get those Billy Joel tickets.
I mean, we have another hour of the show, Carol. I don't know where you're going.
Well, so do we. I'm just saying, we're done. We're done.
This moment is done.
For good.
I'm not done. I'm staying.
There she goes. There she goes. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Bye, Alex. Remain, you stay there. We'll stay there.
What?
Beyond the Bell. Oh, she stays there.
She's staying today.
Oh, you are staying there.
Alex
All right.
is staying.
Beyond the
Just
Bell.
today.
We'll see you on Friday.
Just today, guys.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol. I'm Tim.
Hi.
Hi.
I'm just getting my notes.
Carol, a little bit of news today.
Yes.
In the world of executive transition.
Yes.
James Gorman is going to cede his role at Morgan Stanley as chairman at end of year. He's going to cap a nearly 2-decade run at the firm in which he rescued it from the brink of failure, turned it into a wealth management powerhouse. Remember, Gorman was CEO until January. That's when Ted Pick took over.
Right. Well, this is Ty Wiggins' world. His job is to guide CEOs through their first year, 2 years and a half. He writes in his new book that he's part coach, part cheerleader, a venting partner, a challenger, and an advisor. I feel like I want to hire him. But anyway.
Or it sounds like a pretty cool job, actually. The new book is called The New CEO, Lessons from CEOs on How to Start Well and Perform Quickly, minus the common mistakes. Ty's also global lead and CEO and global lead of CEO and executive transition practice over at Russell Reynolds Associates. It's an executive search firm. He joins us from the UK. Ty, good to have you with us. Congratulations to you and the team on the new book. Look, CEOs, they're few and far between. There aren't that many of them. There's only one at each company. So what do you want non-CEOs to get out of this book?
Well, thanks, Tim and Carol. I think non-CEOs, the opportunity in the book here is to understand the pressures and the challenges that CEOs go through in their transition. And I think if you're a senior leader or an executive in an organization that's undergoing a CEO transition, the book will give you insight into how to best support and also slot in with the new CEO.
Well, talk to us about who you talked to for this book to get some insight. And, what is so important about maybe those first few days, first few weeks, first few months for a CEO on the job? Because I got to say, I feel like CEOs move around a lot as of late. And especially if it's a publicly held company and the stock isn't doing well, activists are out there or media's all over it. And there's a lot of pressure.
Yeah. In terms of the book, interviewed close to 40 CEOs and then had the opportunity to speak to CEOs such as Ramon Laguarta of PepsiCo and Hans Vestberg of Verizon, Carol Tremay of UPS, and a string of others that are sort of cited in the book. You're right, CEO tenures are decreasing, which puts pressure on this early period in order to get a good start. And I think some of the early actions that CEOs take need to be really well thought through. We know that some key factors are the state of the business that they inherit, how quickly they assemble the right senior leadership team around them, and importantly, what the former CEO does and how that individual leaves the organization.
Go ahead, Carol.
Share with us, though, in some of the conversations that you had with CEOs, all of the companies that we named, whether it was UPS or some others, that these are very well known, certainly to the Bloomberg audience. What did you get from them about that first year?
Well, a lot of humility, which was really good to hear. I mean, these are great CEOs, as you've mentioned, and some of them came internally within the organization, and I think there was a common thread around how difficult the CEO role is, how there's no real sandbox for it in terms of getting ready. It's a shock. We've talked about the loneliness a lot across different medias, and it's an actual it's an actual issue for a lot of CEOs, and the responsibility. When I ask what the best and worst part about being a CEO is, often the answer is the same: the responsibility. These are individuals that want the responsibility, they want to lead, they want to have an impact on the organization and their community, but they also feel the weight of that responsibility in terms of being responsible for the financials, but also their employees, families, etc., in terms of the market and the communities that they lead.
What do you think about like those CEOs that are at a company, leave, and then they come back? And I think of someone like a Michael Eisner,
The
right?
boomerang CEOs.
The boomerang, but revered.
You mean a Bob Iger?
Like a Bob Iger, of Disney, revered.
Or like a Howard Schultz.
Or a Howard Schultz, right? Come back, and their track record was incredible when they left. Certainly Bob Iger, right? People, held him up really high, and then came back into a situation where the company was under some pressure because of its streaming pivot and so on and so forth. Is he like kind of starting from scratch again a little bit because some of the dynamics have changed? I'm curious if you have a thought about, or Howard Schultz, those CEOs. We talked to John Mackey yesterday of Whole Foods, who stepped back.
He was there for more than 40 years.
Right, but stepped back sometimes, had a co-CEO maybe that was more out in front. Like, I just wonder your thoughts on that.
I think it's, to have a CEO return, depending on the individual and the organization, it can represent a number of things in terms of, a succession that hasn't been successful. It obviously shows a passion and a love for the organization to come back. In many cases, it's disruptive, depending on the time period, because we do expect the new CEO to see the world differently and to take a new long-term view of the organization. So if there are changes that need to be reversed, that could be a little bit unsettling. But I think for the individuals involved, I think if they're leaving at the right time in their career, then, I think it's less than ideal for them to need to return. But, each individual case will be different.
Ty, we've heard criticisms about boards being too close to their CEOs. Tesla, for example, one of the board members there is Kimball Musk, Elon Musk's brother.
Should you not have a board member who has the same last name as you?
Yeah, it's a good question. I mean, should are boards too close to their CEOs? Shouldn't they be more independent from one another? They're supposed to keep them honest, right?
Absolutely. I mean, the board role is crucial to the governance of the organization, and they do play a specific role. And one of those, key roles that they play is to hire and fire the CEO. And so this is, any CEO transition lands heavily on the board as well. As all groups of individuals and within organizations, it can be quite a challenge to continue to maintain that independence, especially when you have a very successful, very dominant CEO.
Should CEOs be allowed to serve as chairs of boards, in your opinion?
Well, I think it's common practice in a lot of organizations, especially in the United States. In other countries, it's less common. I think as long as there is a independent, senior director to provide that counsel, that support, and that challenge, it does allow CEOs to move with greater pace. So if the organization is in trouble, then that allows for quicker decision making. But I think that if we look at the independence that we require, there's argument for the CEO to be separate to the chair role.
Just get about a minute, and then we're going to come back and continue the conversation. Having said that, is there a common mistake in talking to CEOs that you find that they all say, this is the one I made? Is there a common mistake among them, especially in those early months or that early first year and a half?
The common mistake is generally around something that they say in a fairly public environment or an early action that they make without enough context and without enough information. And this is a question that comes up a lot. And the answer is really, it's any mistake that causes the board to doubt and to where you might lose the confidence of the board, because that obviously significantly impacts your tenure and your ability to deliver longer term.
John Mackey talked to us about this yesterday, his 2009 op-ed about Obamacare in the Wall Street Journal. He was hiking and he got this panicked call. It's in the book.
From the board.
And after that, he said, the board said basically shut him down when it came to talking about that stuff.
Yeah, don't share your opinions on this stuff.
It's really interesting.
Yeah, and he stopped.
I mean, he wasn't early on in his tenure either by then.
No, but it was interesting. And he said, like, lesson learned. Like,
lesson learned.
Never again.
Never
and now that he's not involved, like, he can talk about whatever the heck he wants.
Exactly.
Hey, Ty, sit tight. We're going to come back and continue. Ty Wiggins, Global Lead, CEO and Executive Transition Practice at Russell Reynolds Associates. He's got a new book out. It is called The New CEO, Lessons from CEOs on How to Start Well and Perform Quickly, minus the common mistakes. Chapter 11, if I could do it all over again, I want to get into that a little bit and maybe talk about some current CEOs.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Steep losses for the U.S. stock market today. The Dow, the S&P, NASDAQ all ending very much in the red. S&P 500 index today fell 39 points, a drop of 0.7%. Dow Industrials down 605 when it was all over, a drop there of just about 1.6%. NASDAQ today lower by 65 points, a drop for NASDAQ of just about 0.4%. 10-year, 4.47%, with a 2-year, 4.93%. Spot gold today, lower by $47 the ounce for gold, a drop of 2%, $23.31 an ounce on the precious metal, while West Texas Intermediate crude oil was down 0.8%, $76.92 for a barrel of WTI. After the bell, we heard from Intuit. It forecast adjusted EPS for the full year, and that guidance did beat the average analyst estimate. Shares lower after hours. Also reporting after hours, we heard from Workday, and it reported revenue for the first quarter that met the average analyst estimate. After hours, we got Workday shares now trading lower after hours. Workday right now, little changed actually. Workday up by about 0.3%. So again, recapping the Dow, the S&P, NASDAQ, all ending the Thursday session. Steep losses today. NVIDIA, very closely watched. NVIDIA today on a down day for the rest of the market, above $1,000. NVIDIA up 9.3%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Ty Wiggins, author of The New CEO, Lessons from CEOs on How to Start Well and Perform Quickly, minus the common mistakes. He is also global lead of CEO and executive transition practice at Russell Reynolds Associates, an executive search firm. He's still with us from the UK. Hey, you know, this kind of spoke to us. There is a section in the book about dealing with the street. And here we are, you know, coming off an earnings season, but we're always thinking about the next one. But you do talk about Mark Klaus, who was CEO at Pinnacle before joining Campbell's, and just the level of engagement and communicating with investors when he got to Campbell. I mean, that can be a big thing and kind of a real eye-opener, right, for CEOs who are early in on the job.
Yeah, absolutely. Unless you've been a CIO or a CFO and had, you know, extensive experience, the investor relations will be fairly new, and it's a challenging period of time. You know, the people will often underestimate the amount of preparation that goes into delivering results and doing the investor roadshows, and, you know, trying to form that relationship really early to get buy-in to, you know, what you're planning to do and what you're thinking about doing. So, you know, this is where it's really important that you surround yourself with good IR people and, you know, people to support you in those conversations. And, you know, if it's early in your tenure that you deliver results, then you have a little bit of grace, and you should take full advantage of that.
Okay, I want to play off of grace a little bit, because I was when preparing for this book and for this interview, I thought about the CEO stories that we've covered over the years, and it does seem like there was a spate a couple years ago, 2018, 2019, where we had a lot of episodes of CEOs behaving badly. A lot of male CEOs having affairs with women who reported to them. And there were some very prominent examples of that. And I'm wondering if you think it happens more at the executive level, or like, is this something that, I mean, it seemed kind of a little wild to me that we saw people get to these levels in companies, and then they would have such public downfalls by making what seemed like a really, really silly mistake.
Look, it's you know, I don't know whether I'd argue it's happening more or less. I think it's certainly disappointing when that is the outcome or that is the behavior that we see from the leaders at the top of the organization. You know, one of the things that stands out for CEOs when I talk to them about what's the most important thing that they focus on, it's inevitably culture. You know, this is the one thing that, whilst there's lots of people that support it, as CEO, you can't delegate that. So you are the masthead for the organization, and how you behave and act and what you say, you know, is disproportionate in its effect to the culture of the organization. And if you have a culture which is not conducive to where you want to take the organization, you know, your performance and the organization's performance will really struggle.
Hey, one of the things that we wanted to get into, and Tim is in our prepping for this, Tim, you kind of highlighted this, but executive compensation, CEO compensation. I mean, I think about sometimes when there's a company in trouble, right? Peloton, you know, and you have Barry McCarthy comes in. He just stepped down as Peloton CEO, had total compensation of $168 million in 2022. To be fair, most of that compensation, 99.7, was option awards, so tied to the company's stock price. But it's a lot of money for a company that's, you know, got a dwindling market cap. I think barely over $1 billion here at this point. You know, it's I hear what you're like. It can be a tough job. I understand. There's a lot that comes out of CEO today, but it does feel like they're taken care of.
Yeah,
Especially if they're public.
Fortunately,
yeah.
Compensation is not an area that I get involved in. I know that it's a contested issue. I know that the CEOs that I work with certainly are really aware of that in terms of their role. It's nice to think that the people that I work with, especially, this is not the driving force for what they're doing, why they're doing what they're doing, and it is really about the opportunity to have an impact over such a large group of individuals, and a responsibility, and I guess a belief that they can do, better and make improvements and, really serve. So, again, I probably have a privileged group, but that's not the key driver for why they're doing what they're doing.
Forgive me, because I must have a misconception about executive search, but I thought compensation was a big part of not just how you go out and find folks to do these jobs, but also how you actually get paid as a result of finding successful fits.
Oh, 100%. My role, though, within our firm is focused on the CEO and executive transition practice. So I don't do the search work, and I don't get into those conversations with the clients. I come in once they're appointed to help them to make sure that they're successful in that transition.
But fair, right? It certainly is a lot of the conversations. Hey, one of the things I do want to go to is Chapter 11, if I could do it all over again. And you share a collection of pieces of advice from some of the CEOs you talked to. I'm not going to put you on the spot in terms of necessarily giving you a name like Mark Bitzer of Whirlpool.
We speak to him a lot.
We've talked with him a lot. But are there a couple of pieces of advice that really just have resonated with you?
Yeah, when people reflect on their time early in their CEO role, there's a couple of things that come up, most often. The most popular is that they would move faster on their executive leadership team. Being CEO is a role you can't do on your own. You must have the right people around. And for a bunch of reasons, we don't move as quickly as necessarily our gut is telling us to move, and there are other restrictions in terms of momentum. So the first is that they would move faster. The second is that they would engage the board more effectively and earlier. So similar to dealing with the street, working with a board for the first time as CEO, not as a senior executive, is quite a shift. And you usually spend more time on board and board-related activities in your first year than you expect. So you really need to factor that in. And the third is that they would flex their leadership style more. So they hang on to some of the things that served them well before, without really accepting and stepping into the full gamut of the CEO role, accepting the good and the bad parts of it, in terms of driving the outcomes that they know they need to deliver based on what they've promised the organization and the board and the market.
And if you're someone like Hans Vestberg, CEO of Verizon, I've talked with him a few times, you walk the board through, or he did walk the board through his white paper. I love that, before accepting the role. So it's basically like when my daughter wanted a puppy and she did a whiteboard presentation, and she
why I deserve it.
Spent a long time, and she went through it, and we're like, okay, you get the dog. But it's right, like you lay it out and you're saying, here's what I'm thinking, and let's just make sure we're all on the same page, because if this doesn't work for you, it kind of doesn't work for me, right?
Yeah, and Hans did it really well. And this is one of the things that you see second-time CEOs do much better than first-time CEOs is this pre-contracting with the board, is outlining, this conversation of when, not if, I want to make a significant change or point the organization in a different direction. How are you going to respond?
Yeah.
And in Hans's case, he was really keen to make sure he didn't get 6 or 12 months down the track and have the board say, I didn't know you were going to do this, or I didn't know you were going to do that. And it was really key to him moving fast.
Exactly. Hey, just got about a minute left here. Is Elon one of the new CEOs in your view?
Elon Musk?
Yeah.
I think he's a different CEO.
Go on.
Well, I think there's, there are very few individuals like him. And, in many ways, the impact and influence he's had in his space, I would say he's definitely in that new category.
And what about Boeing, which has been plagued with problems? Just got about 40 seconds left here.
Now.
They're searching for a new CEO. Internal, external, I don't know. Just give us some smart thoughts on that one.
Well, I think, not necessarily Boeing specific, but an organization that really has lost the trust of the public, it's often a cultural change. So whoever comes into an organization that's in that type of state, they really need to focus on changing the culture, being transparent with the consumer about the issues to the level that they can be, and owning some of these challenges in terms of, how and what we're going to do to fix that. But ultimately, these top challenges, stem from culture. It's a culture issue.
Really interesting. Yeah, no, absolutely. Interesting. Thank you so much for stopping by and sharing your book with us. Really appreciate it. Ty Wiggins, global lead of CEO and executive transition practice over at Russell Reynolds Associates, as we said, an executive search firm over there in the UK. The new CEO, Lessons from the CEOs on how to start well and perform quickly minus the common mistakes. It's a new book, so be sure to check it out.
Hey, let's get a check on latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Senate Republicans did block that bipartisan border security bill. It was crafted by a bipartisan group of senators, rejected by Republicans in February when it was linked with a foreign aid package. Senate Majority Leader Chuck Schumer.
We had hoped that Republicans, having supported this bill once, would put aside politics and rise to the occasion.
Schumer put the bill on the floor to highlight GOP resistance to the legislation. Not even some of the bill's primary authors, Republican James Lankford and Independent Kirsten Sinema, voted to advance it. The Justice Department is suing Ticketmaster and parent company Live Nation, accusing them of running an illegal monopoly over live events and driving up ticket prices for fans. Attorney General Merrick Garland.
We allege that Live Nation has illegally monopolized markets across the live concert industry in the United States for far too long. It is time to break it up.
Live Nation and Ticketmaster are accused of using anti-competitive practices like locking venues into long-term contracts and retaliating against rivals. Live Nation has denied it engages in practices that violate antitrust laws. Israel will expand its military operation against Hamas and Rafah, saying 1 million civilians have moved out of the southern Gaza City. Defense Minister Yoav Gallant says the operation is growing with more forces on the ground and more forces in the air. Memorial Day weekend travel is expected to be the busiest in more than 10 years and kick off a record summer travel season. It could be a messy summer. An analysis of data from Cirium indicates long lines at airports, more passengers crammed into fewer seats. Airlines have dropped more than 6 million seats from their June through August flight schedules. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. It was a down day for the Dow, the S&P, and NASDAQ. S&P lower by 39 to 52.67, a drop today of 0.7%. Dow Industrials today down 605. For the Dow, a decline of 1.5%, while NASDAQ was lower by 65. For NASDAQ, a decline today of just about 0.4%. 10-year 4.47%, with a 2-year 4.93%. Spot gold today declined 2.1%, 23.27 the ounce on gold, while West Texas Intermediate crude oil down 0.8%, 76.96 for a barrel of WTI. Intuit shares after hours moving lower by 7%. It reported tax season revenue that did exceed estimates as more users opted for higher price features. Also reporting after the close of trading, we heard from Workday. It's out with revenue for the first quarter that met the average analyst estimate. Again, recapping the Dow, the S&P, NASDAQ all ending in the red. S&P today down 39, a drop of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Over 200 of his guitars are being auctioned off from his 5 decades of playing them with iconic bands on iconic songs. It's all happening at the Julian's Auctions Music Icon Sale, happening at the Hard Rock Cafe in New York City next week. He is an icon. You just heard the music. As a founding member of Bachman Turner Overdrive, BTO, and the Guess Who, I've got to say, my brother George, I was texting earlier, he would go crazy. I grew up with 6 siblings, and so there's always music on the house, including Bachman Turner Overdrive. With us is Randy Bachman. He's joining us here in our Bloomberg Interactive Broker Studio. Truly grew up with it, love it. How are you?
Very good. I'm happy.
Oh, happy is a good thing.
I'm happy to be here. We couldn't go anywhere for 3 years. I'm happy to get out of the house. Happy to go to the grocery store.
Amen. We all assume that being in, kind of walking around in your shoes, having lived your life, the bands you've been in, the iconic songs that still resonate with so many of us today, that you've lived a pretty amazing life and are still living it. Is that fair?
Well, there's a flip side to the coin.
Okay.
And I have to tell you, this happens with a lot of us. When the gig is done and the thousands of screaming, you're in a car with a bunch of guys where you've been on the road for 2 months and you don't really like each other anymore, and everyone else is going home with their loved one to a snugly home bed, and the kids with a babysitter and the fireplace burning, and you're all alone on the damn road for 30, 60, 90 days. And that's the flip side. The other side is wonderful. It's your teenage dream. You want to be like Jimi Hendrix or the Beatles or Lady Gaga or whatever you want to be.
Yeah.
You go and be that because you have this little talent that you've been given as a kid. And it's really amazing when you get to do what you want and make a living at it. That's the good side of it.
And be really successful at it.
But the travel is killer.
What was the point for you that it sort of shifted from living out that teenage dream to feeling like, okay, I want to be home in my own bed?
It happens every tour. It happens daily.
But did it happen earlier?
Teenage dream now. I'm here on this great thing. I'm plugging my guitar sale.
But look, to be fair, Carol asked where your home base is, and you said an airplane. You're traveling a ton still.
Yeah.
Yeah.
All right. Yeah.
It wasn't a joke.
And you're going to go on tour again. And you're going to go touring
When you get home, you get anxious to go on the road. When you get on the road, you get anxious to go home. If you ask an actor, do you like movies or stage, they say yes. You like one or the other at each time, and you've got to do kind of both to be fully rounded. You can't make a living in this business. I can't be an athlete and play a home game all the time. You got to go away. So all these glamorous gigs where guys are getting hundreds of millions of dollars to play baseball, there's a downside, but the upside's big.
No, we feel that sometimes, right? We love travel, we love our jobs, but it's nice to be home, and we love that. We're going to talk about the auction in a moment, but I want to ask you, in researching, we came across that Elvis Presley's motto, taking care of business, was inspired by your band's song. Have you heard this?
Yes, I was a big fan of Elvis. I played classical violin from the age of 5 to 14. And I got tired of playing classical music. I auditioned for the Winnipeg School Junior Symphony and flunked. Quit playing, went home, said to my mom, that's it, I quit, I can't play. I'm never playing the violin again. The next day I saw Elvis on television.
Yeah.
And said, what is that? Oh, it's called rock and roll, that's called the guitar, and that's called Elvis. All you play on violin is melody. You're playing the top line. So my cousins had a guitar. I got their guitar. I could play everything because I was playing violin by ear.
Yeah.
Even classical music, my teacher played first Tchaikovsky or Chopin, and I would play it. So I started playing lead guitar, boom. And then I'm in the Guess Who. And then here I am. Because of Elvis. A few years ago, after he passed away, Priscilla was doing an HBO special in Graceland. She said, oh yeah, we were driving to the LA airport to fly back to Memphis, and Elvis heard a song on the radio by a Canadian band, Taking Care of Business. He went, boom, I want that TCB lightning bolt right away, bada bing, bada boom. And that became his motto for his band. It's on his tombstone. Nobody else can use that. I wrote the song. I can use Taking Care of Business. He can use it, and
that's pretty cool.
I have a buddy
That's
who's waiting somewhere for me to show up.
Incredible.
We'll do singing, Taking Care of Business together.
Okay, not too soon. Okay.
That's pretty cool.
The auction is something we want to talk about.
Yeah, next
200
weekend.
guitars.
Yeah, and I still have a couple hundred.
That's
left.
what we were going to ask.
wanted to
Is
know.
this isn't all of your guitars?
How many pairs of shoes do you have in your closet?
A lot.
You don't know. I don't know how many guitars I have.
I don't even tell my husband. No, it's interesting. My husband also plays guitar. Not, but a lot of fun. But it's like you can never have enough guitars.
Right.
What is that?
How many shoes do you have?
Can never. All right, done.
You know what? It's fair.
Done. You don't even
Done.
have to
Okay.
justify. So why are you selling even some of them?
I had 4. When you travel, I want to be like Chuck Berry or a lot of these other guys. You have a home in London, a home in LA, so you don't have to, we're sick of motels.
Yeah.
You'll drive 300 or 400 nights to sleep in your own bed for a couple of hours. So I had a home in London, Covent Garden, Santa Monica, Toronto, outside of Toronto, Oakville, and Victoria. Can't go to them. Shut down for 3 or 4 years. You can't go to your home. You sell everything, ship it to me. You end up with 4 lawnmowers, 4 toasters, hundreds of knives and forks, and hundreds of guitars all coming to your house. You got to rent a storage space, and you can't see them. They're all in a storage, so you got to open a door and go in and look at your stuff in storage. So it was time to sell it.
These guitars, though, each one of them has a story.
A lot of these do. A lot of them. My American Woman 1959 Les Paul is a rare guitar to begin with. They only made a couple hundred each year. And the 58, 59, 60 are very rare because they were the last time they made them with a certain glue that when they put the neck and the body, that glue permeated the wood in the pores and then petrified. The guitar has this brang and it's very heavy. Guitar weighs 15 pounds. You can imagine that on your shoulder for 4 hours every day. You end up doing this all the time. It's just dynamic tension. Your muscles do that. And I had to get a lighter guitar. But I played that one sitting down. But it's the sound of American Woman. If you hear that,
Could you imagine?
and no time, all the Guess Who hits, and a lot of BTO guitar solos were that guitar. I just didn't play it on stage. It was too heavy to stand up. So then I started to play Fender Stratocaster. So the 2 white Strats I used with BTO are there. They're #1 guitars. They played on You Ain't Seen Nothing Yet, Let It Ride. My Les Paul was American Woman, No Time. So these are iconic guitars that are played on #1 singles, and then all the albums on both sides of it. So I'm hoping they get a good home, because sooner or later, you leave home or your kids leave home. My kids are leaving home.
They don't necessarily
My
want all
children,
this
and I
stuff,
hope
right?
somebody adopts them.
Yeah.
And the American Woman guitar is bought by Slash or Lenny Kravitz, who would
that'd be
deserve
cool.
it. And it has another hit. It plays another
Has
hit
anybody reached out to you
thing.
about
There's a
saying?
magic in these guitars.
Yeah.
We just picked them up. They were traveling with us all day playing them. And when you plug it in and play it, you've heard this sound before. Even though it's strange to you, you've heard it on the radio so many times.
right.
Even the rhythm to Let It Ride and things like that. There's a ka-ching when you hear it.
Randy, there's no point where we've got about 40 seconds, then we're going to take a break and we're going to come back and finish up. But when you play it again, is there any part of you that's like, maybe I don't want to let it go?
Yeah.
Yeah.
They were handing it to me one at a time last night. We did a little showcase, and I go, gee, I don't want to sell this, but I haven't played it for 11 years. I'll probably never play it for another 11 years. It's time for it to get a new one. It's time for somebody to play them. You know?
That's right. Rather that than they're sitting in their cases, right?
Yeah.
In a storage room
Like
or in your house.
The legal lawyer's library. They don't go to the books anymore. It's all on the computer. It's just like the guitars. You can't get to the guitars. They're all in storage.
Unbelievable. Randy, sit tight. We're going to come back.
Okay.
Like I said, due to a little bit of news, we're talking with Randy Bachman. He's founding member, you know this, of Bachman Turner Overdrive, also the Guess Who. Here in our studio, we're going to talk a little bit more about Julian's Auctions Music Icon Sale. It's happening May 29th, May 30th, next week, live at the Hard Rock Cafe in New York City. So you can actually own kind of a piece of an icon. So we're going to talk a little bit more about that. This is Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg.
company news headlines on Bloomberg Radio.
It's 4:53 on Wall Street. We do check markets all day long here at Bloomberg. Right now, taking care of business with chipmaker NVIDIA, higher today, rallying 9.3%, holding above $1,037 on NVIDIA. Even as the market sold off, that bullish sales forecast showed that AI computing spending does remain strong. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence.
It is a virtual monopoly at this point of time. I mean, even though we talk about AMD and other competitors, they're nowhere close to, how quickly this company is shipping product and how they're able to raise prices. I think what really stands out here is the ASP increases that they continue to show from Ampere to, Hopper and now Blackwell. They're adding more kind of capabilities, networking and other kind of things, and they're charging more to the customer, and they're happily paying it.
Bloomberg's Mandeep Singh again. NVIDIA today up 9.3%. Other chip makers, though, declined. Super Microcomputer was down 3%. Advanced Micro Devices lower by 3.1%. Tough day for Boeing shares, down 7.5%. CFO Brian West says the embattled playmaker will continue to burn cash in the second quarter and in the full year as it grapples with a turnaround effort of its factories and faces a new challenge in the form of additional certification requests from China that have temporarily halted deliveries to the country. Again, Boeing today fell by 7.5%. James Gorman will step down as Morgan Stanley chairman at year-end, capping a nearly two-decade run of the firm in which he rescued it from the brink. Morgan Stanley shares today lower by 1.8%. Those are our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we're talking with Randy Bachman, founding member of Bachman Turner Overdrive, and the Guess Who, because he's got an auction coming up, Julian's Auctions Music Icon Sale. He's got over 200 or roughly 200 guitars in that auction, and that's happening May 29th and May 30th at the Hard Rock Cafe in New York City. Having said that, you need to share with our audience about the lost guitar. Tell us about that.
It's one guitar that will not be auctioned off.
No, I just got it back after being gone 47, 48 years.
Oh, my God.
It was stolen from a hotel in Toronto. I was doing a BTO album there. It vanished. There was no internet then, so I had to fax all the guitar stores. I ended up in a frenzy buying Gretsch guitars. I went through my midlife crisis buying Gretsch guitars. I amassed over 300 and finally sold them to Fred Gretsch. It became the Gretsch Museum in Savannah, Georgia.
Wow. Unbelievable.
But this one that was stolen, I kept searching for, and we got a notice back a couple of years ago. Tal and I, my son, were doing Bachman Trainwreck every Friday night on YouTube because there were no gigs. And a guy said, I found your Gretsch guitar. It was in Tokyo with a guy named Takeshi. It was like the Brian Setzer of playing rockabilly on this big orange Gretsch.
Yeah.
And my daughter-in-law is Japanese, so she set up a Zoom with him, translated everything. He offered the guitar back. I went and found its sister guitar from the same year, 2 digits off in the serial number, so I could trade him a like guitar. We couldn't go to Tokyo, but the Canadian ambassador said, I'll get you in as a diplomat. You don't have to do 2 weeks of isolation being COVID tested every day. Air Canada offered free tickets. It was like everybody doing a good deed for this guitar. And we went there. They wouldn't let me meet Takeshi or see my guitar until I walked on stage on Canada Day, July the 1st, in the Canadian consulate. So through the filming, this is being a film. They wanted to see my face when I saw this guitar. It's like if your childhood bike or your dog got run over by a truck, and then somebody later came and said, well, your dog had puppies, and here's a puppy, and it's just like your dog. Skippy is back, right? So I'll get my guitar back.
Skippy was back.
They filmed it, and it's going to be a film coming out very soon.
Very cool.
It's being edited right now.
It's Netflix?
Can we say Netflix?
Maybe.
If
they bid high enough.
Okay.
All right. Well, will you come back when it's on?
I will. That'll be a whole different story. That's the guitar I've got now at home. It was #1 guitar with the Guess Who and BTO with all their hits and albums. And maybe I'll have a #1 again on Rotten Tomatoes or something when the film comes out. But my son and I cut an album that's coming out that's a soundtrack to the movie of The Lost Guitar. Wow. You never know.
You never know.
Might be my magic feather. Might be my Dumbo You Can Fly. Here's your magic guitar. Another hit song.
Do you have a favorite hit song of your own?
I think it might have to be Taking Care of Business. I've had many teachers come to me that teach handicapped kids, altruistic kids, very advanced kids, and to get all their attention in the morning, they always play Taking Care of Business. All these little kids who are attention deficit or whatever, and also guys going in Desert Storm in their tanks to battle, playing Taking Care of Business, or playing American Woman. In their tanks, they're going to fight. When the Canadian astronaut was in the air, he played Taking Care of Business. I gotta say that song, thanks to Elvis and me, is like, wow.
Gotta feel pretty cool
Very
about
cool.
this. Got 30, 40 seconds left.